Hi there. Now in this lesson we are going to walk you through the exact strategy. We're going to show you how to identify potential trade setups in this high probability trading strategy. Now I'm going to be using this back testing software called Forex Tester. It will enable me to scroll through the price charts, looking at the candles. I'll be toggling between the candlestick chart, back to the line chart, plotting in key areas of support and resistance that we covered in previous training, so it'll be further training on that as well. Okay, now I'm going to be looking back over a number of different currency pairs over a number of years. So for the easy viewing, I'm going to edit the video, so you're just going to be seeing some key areas of interest. That doesn't mean I'm just picking the winning trades. There's also going to be some losing trades in there. There's also going to be some potential trade setups that we're not going to take, and I'm going to highlight the reasons why we don't take every setup. Okay, so in the meantime, sit back and enjoy. If you have any questions at all, please make sure you get in contact. And now coming back up to old support, new resistance, holds it, rolls back over, back down to old support, holds it for a couple of days, pierces it and then trades and closes higher. 3 days and then finally breaks through, back down to the next level and trades on through there. Bounces back up to the old support, new resistance, and then back down again. Now that looks like a Sunday candle. However, this candle does engulf the previous Friday's candle. Sunday candle is basically a very small candle. The market's only open for 4 or 5 hours before the candle closes, and so ignore that. But we do look at the Friday candle, and indeed it does engulf. My only concern about this trade is I've got to place my buy order 5 pips above the higher the candle. It only gives me a potential of a 80 pip gain, nice gain, but my risk is 250. My risk, it has to be no more than twice my first take profit target. So if I can only get 80 pips to the next level of significance, the next level of resistance, and 80 pips is much more than half the risk, so I'm not going to be taking that trade. However, it would have looked and worked out quite nicely. Sometimes it's good not to take trades if they're not high probability. There's no harm in missing trades, unless you're very convinced that they're high probability trades. And continue pushing on through, coming back down into support, touches support, bounces off it. Now this candle opens up below the support. This is clearly a Sunday candle. Sunday markets are only open for 5 hours or so before the new candle starts, so it's a very small candle, so we ignore the Sunday candle. But this is a bullish engulfing setup here, because this candle here engulfs the previous candle of significance, which would have been the Friday candle. So this could have been a setup here for you. What I need to do here is to see if I've got potential profit before the next level of resistance. And again here I've only got about 90 pips of potential profit, but my stop is going to be 250 pips away. I need my potential profit to be at least half of the stop distance, so at least half of 240 is 120, so I need at least 120 pip potential gain before I take the profit, and 120 would have put me in basically above this level of resistance, so I won't be taking that trade. Okay, remember, you only want to take the high probability setups. Look to see where your potential profit is and risk manage accordingly. Indeed, it would have worked out to be a nice trade had we taken it, but it was not high probability at the time. So we'll just carry on scrolling through, looking for more. So just scrolling on through the candles, looking at price action, coming back up into resistance, bounces off, and now some strong momentum to the downside, coming back into this support zone, bounces off it, holds it, and then creates a pin bar here. So this could be a reversal pin bar to take to the upside. Only problem with this though is that I haven't got the room to the next resistance level to the upside. So let me just increase the size there. You'll see here, could possibly take that, but I'm straight back into this resistance level. So this has not got the high probability that I'd be looking for. So I would ignore that pin bar, although it has actually formed quite nicely by breaking through this support and closed above it. But as I say, it doesn't give me the room for profit. So I'll leave that one alone. Let's just see how it would have panned out. Indeed, it broke off that, it bounced off, repelled off that resistance level a couple of days, and finally broke through on the fourth day, came back down to test it again, so it's still at a level, and then came back down. So you would have been into negative position, negative loss at one point, and then a few days later we would have pushed up. But yeah, this is a risk candle that's just not high probability, so we leave that one. Okay, continue to scrolling on through. Market's moving up to this level of resistance, holds, pulls back down, comes back down with a big momentum candle, holds at that support, and now here we have a pin bar set up coming up. So we've broken through support. So quick look at the line graph. So we've broken through this support, closed higher, our next profit target is basically would be at this level of resistance, which is just too close. Okay, so although this is a good looking pin bar into prior support, the next level of resistance to the upside is just too close for me to take that trade. So this is a classic case of a pin bar setup that I'll be leaving alone. Let's just see how it would have panned out. In fact, it did hold at that support and then finally broke through and would have finally paid off after maybe a week and a half, but we've been in the trade for a long time, and have certainly into this resistance certainly was looking like a holding place, and it certainly did. Okay, so markets pushing on, expecting this level of significance, old high here, now acting as support, bounces off again, now making newer highs, so possibly put in a line up here. It's respected it a couple of times there and bounced off, so you can see that's a key level. Okay, so here we have an engulfing, bearish engulfing. So markets, so the right hand candle has completely engulfed the previous candle. It's got a higher high, a lower low, closed lower. The top of the wick has come into this level of resistance to the upside. So we can certainly place an order here. Let's see if this one works out. So we'll place a new pending order. So this will be a sell stop, and we'll place that basically a couple of pips, 5 pips below the low of that. And our stop loss is going to be above by 5 pips. And our take profit target is going to be at the next level of support. So basically what I'm looking at before I qualify this trade is to make sure we have got air, we've got space to the next level of support, and it's basically back down here. Let me just have a quick look actually on the line chart to see if the next level of support is in fact should be maybe back down here. Okay, so that's where my next level of support really is. So I'm going to make sure that I've got the space for that. So I'm going to go back to that pending order now and we'll edit that and place my take profit target back down at this level here. That's the great thing about Forex Tester. Again, you can put in real trades to see if this places works out. Okay, so remember we've got to make sure we enter on the next candle. If it doesn't enter on the next candle, the trade is void, and indeed we are now short. We're now on a short trade and our profit target is down here. Comes back up, thinks about it, and indeed it works out. This is on a 1 profit target. If you wanted 2 profit targets, of course, you can exit half the position at the first profit target and take the next profit target to the next key level of support. So you might want to take it down to this level down here because this one's quite close. These are quite close areas. So you might take it down to there, and of course position size accordingly. So that's another one that works out quite nicely. We just push on, and indeed, had you taken 2 profit targets with a further one at the next support level, it would have worked out very nicely indeed, where it stalled before it rolled back over. Up to the resistance, holds it, rolls back over, back down to previous support, holds it again, pushes up. See how these levels are so well respected. Back down again and respected yet again. You see here on the line chart how important this line is now. There, 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 there. Good level. Back to the candlestick chart. Okay, so here's an interesting one. We have, this is the pin bar setup. Here's our pin bar. The upper half of the pin bar is a third of the candle, so that works. Our potential target to profit is the next resistance level. That works because that is a decent distance, a lot of space, and certainly will be bigger than our stop. So we can take an entry. Now normally we need to make sure that our take profit target is at least half our stop target. Our stop target on here will be approximately 138 pips. Our take profit target will be 168, 63 pips or something like that. So that one works. So let's do a pending order. So new pending order. This is going to be a buy stop, and we'll take the level just above, 5 pips above that candle. The pin bar candle. My stop is going to be 5 pips below, and my take profit target on this occasion is going to be back up at the next resistance level. Now, as always, you can take profit targets in 2 places at different resistance or stop levels, and obviously you could move, take half off and move the balance to break even and run the second half. That's up to your back testing. Okay, so let's see how this one panned out. Got to enter on the next bar, and indeed we do. And again, this has shot straight up on the next candle, so that basically takes us out literally on the next day. Great entry. Had you had 2 profit targets, you would have been back down at break even. So that was a good profit target. Again, another profitable trade. Very powerful and high probability setup. And we'll just keep pushing on, looking for more. So we're just strolling through the candles now, looking for pin bar or engulfing setups, looking how price respects these levels time and time again. Respecting this resistance, rolling over, coming back to support and up again. Big momentum candle. And back down into support and closes at support. And now we're trading up through resistance and closes back down. So here's a potential setup. Okay, so here we've got an engulfing bearish candle here to the right. Completely engulfs the previous candle, which looks like to be a Sunday candle because of the nature of it. And Sundays only open for 5 hours, so they're much shorter in length generally. But more importantly, it engulfs the Friday candle as well. So it's got a lower low than the Friday candle, and a higher high than the Friday candle. Both these levels tested resistance levels and closed back down lower. So I'm happy to take this trade to the downside. And I'm looking, before I take the trade, at my potential profit target. My potential profit target, if I enter just below the candle, is going to be potentially 100 pip profit. And my stop is going to be potentially 170. So that is less. That is less than half. So that's good. I need to make sure that my stop is twice the size of my take profit target. So this is fine for me to take that trade. Okay. Let's have a look here. I took the pending order, new pending order, and we're going to do a sell stop, and we'll place the sell stop below this engulfing candle by 5 pips. We'll place the stop loss above by 5 pips, and we'll do the take profit target back down at this support. Now this is the first take profit target. As we say, an idea is to enter exit in 2 halves. So you exit the first half at the first profit target, okay, and the second half would be at the second profit target, and you move to stops to break even or so. But just for the sake of this, we'll just do the show you the entries, and let's see how this panned out. Now remember, it's got to enter on the next candle, so we need to break the low of this candle on the next candle, and indeed, oh, in fact, it does indeed, and just literally takes it out on one click. So they don't often go like that, but that's great. You would have had the profit hit in the one candle, and that would have been in those 100 pips. Let's see how we would have panned on, and indeed, so it would have made its way. In fact, you would have got stopped out at break even if you'd have done that on two exits, but that's fine. It's a winning trade. Not all of them are winning trades, of course, but it's nice when they come out. Remember, this is a high probability entry strategy and exit strategy, so they win far more than they lose. Okay, let's keep going. Okay, breaking out of that resistance, comes back, tests it, and then finally breaks through past that resistance as well, which was from way back. Where was that? Back from here. Yep, okay, that's a good valid point. So just moving through again. Takes out new highs, forms a new high, comes back to retest that high and rolls back over. So I think that's a valid line to be drawn there. And then carry on through. Coming back to retest, doesn't quite get there. Get a pierce through there on this small wicked candle, too small to take. But this one looks okay. This one looks like a good pin bar entry. So this is the pin bar. We pierced through resistance, closed back lower. Let's just see where our target. We could have a potential target drawn in here as our next level of support. And have we got room to take there? We've got room, which is 155 pips away. The stop would be 300, so that's all right. So it's basically 50% of the stop distance is our take profit target. That's working out fine for our first profit target. So we can take this trade with the first profit target here at the initial support. Of course, you can take your second profit target even further down, possibly even down to here if you wanted to take two targets. Let's see how that plans out. Place the pending order. New pending order, it's a sell stop. Place it 5 pips below the entry. Stop loss is 5 pips above the entry. Take profit target on this occasion, the first take profit target will be down here. We'll place that and see how we go. Remember, we've got to enter on the next bar. Indeed, we do enter, so we're now short this. Moving down to first profit. Couple of days, 3 days and 4 days. 4 days we take the profit. And it would have moved very close to second profit target. Obviously I did those very roughly. Could have been hitting second profit target there as well. And then we push back on up again. Another high probability trade setup there. Okay, so scrolling on through. Okay, so scrolling on through. Here we have a big momentum short candle, bearish candle. Comes into prior support. Trades lower than the support, closes higher. Bit of a pin bar here, but it's quite a small one, so I think we'll leave that one. But this one, it has got the same premise, but just not quite as obvious to me, so I'm going to be leaving that one for now. Another pin bar that breaks the support and closes higher. Almost feels it wants to push higher. We've got to wait for our strategy. Okay, now big selling candle, big red candle through support. And pushes up again. Now this is, I think, much more powerful. This is much more obvious to me, this one here. This is an engulfing bullish setup here. Okay, so you've got this large candle engulfing the previous candle, higher high, lower low, completely engulfs the candle. It's traded through support and closed now higher. So if next bar entry breaks this candle, then we are going to go long. So let's put a trade on to see how we pan out. Okay, so we'll put a buy stop order, and we'll put the buy stop to 5 pips above the candle. There. The stop will be below 5 pips the candle, and our take profit is going to be at our first resistance level. Now we need to make sure that our take profit target is at least 50% of our stop loss target. In this case it certainly is, so we can take that. So we'll put that in there as well. Now we could enter this trade with two exits. So we'll do that now. Let's pull up that order. Just going to duplicate that order. And now put a take profit target at the second take profit target, which is the next level of resistance to the upside. And we'll place that there as well. So now let's see how it pans out. Remember, it's got to enter the next bar, and indeed it does. And in fact, on the next candle, we take out both profit targets. We take out the first initial profit target and the second profit target, which was a nice trade. Now, of course, if it had just taken out the first profit target, we could have moved stops to break even, and ran the second half of the trade up to the next profit target. But on this occasion, it took out both profit targets on the same candle, but we would have been at break even regardless. Another high probability trade set up there. And indeed, it pushed on to new highs. So pushing back up past through resistance, tests the resistance yet again, and just back to the line chart to see these lines, anything new that needs putting in, possibly plopping one in down there and up here. So always revising these levels, putting new ones in as they become apparent. And we'll continue on. Oh, okay, so here's an interesting one. This is a pin bar. It's broken through a couple of levels of resistance, or touched the upper level of resistance, and it's closed back down past the lower one. It's a pin bar because the main body is in the lower third, so it does constitute an entry. Looking to see if we've got room to take profit target. If we enter here, we would be looking at 86 profit target for the first, and the stop would be 140, so that's good. 86 is more than half, so we can take that, and we will do a pending short order. So pending sell stop. And we'll take the entry a couple of pips below that candle. The stop's going to be just above, 5 pips above, and take profit target. First take profit target will be at the first support level. Okay, and the second take profit target would be at the second support level down here. So we're exiting on two parts of the trade. If we exit the first take profit target, we'll move stops to break even and run with the trade. Remember, it's got to enter on the next bar entry, so let's see how we get on. Okay, so we're in the trade now. We're short on this pin bar, and we take out profit target 1 and profit target 2 within the same day. We would have moved stops to break even, and we would have successfully hit take profit target 2 as well. Another good strategy. High probable trade setup. Indeed, markets retraced and rolled back over again. Okay, just scrolling through the charts. Resistance spikes through, closes lower. And into support, breaks the support, back up to test support, rolls back over. See how these lines are respected all the time. Here's another level of support, just broken through now. Having wicked up higher, this is a bearish signal. And now coming back into support again. Okay, so here we've had a test of this support line, closed up higher, and then breaks through to the downside. And now back down to a new support level down here. And why is this line significant? We'll have a look on the line chart, minimize it. You see it's a line back, way back down here, a good while back, but it's still a line of importance. We haven't been down here for a while, so it's as good as any. So we place our support line in there, that just make it a bit bigger for you. So it's pierced through the support, closed higher or just on it, bounces up, back up to test the old resistance. These 3 spikes now, 3 wicks, come pierce through that old resistance, but close low on all 4 occasions. That's a negative sign. And indeed it rolls over into old support. Okay, so now we've got potential shaping up here. This is a pin bar. It's quite a small pin bar, okay, in comparison to the surrounding bars, so we'll maybe leave that one, but it certainly is a potential. And then we roll back down. Now this is significant now. We've now traded down through the support. On third occasion now we've closed up past the support level, so this is a good setup. Looking for potential long entry here now. I need to look for my next level to the upside to see if I've got room before we take our first profit. We've got 145 pips to next resistance, and the stop is going to be about 220, so that's certainly valid. Got to make sure that we get at least half the stop distance until our profit target. So we can take a pending order here. We can do a buy stop order. We'll be placing that just 5 pips above the wick, and the stop loss order will be 5 pips below the wick, and our take profit target is going to be at this first level of resistance. And we can place that, and indeed we can place a 2 exit strategy here, a trade here. So we duplicate that order and we place our take profit target at the second level of resistance up here. So there's a good risk reward on this trade, and let's see how this plans out. We've got to make sure that it trades on the next bar for entry, and indeed it does. Almost takes out our first take profit target on the first day. Didn't quite get there, but we're now long, and now we finally take it out on the third day. So we now move stops to break even on the second trade. So you'd move that to break even. I don't think I can do it on here, so we'll just carry on through, but that would be at break even now. So if we trade back down to entry, then we'll be out of that, basically where this buy line is. And indeed it's pushing up again and takes out our second take profit target as well. So that works out quite nicely. Both profit targets hit on that pin bar high probability trade setup using the daily closes. And indeed the currency pair just moved on up. Another good trade.